Hello guys, how are you? Okay, how are you? Happy New Year. Okay, how are you guys? Happy New Year to all of you. I'm just waiting to get instructions on when to start. So Happy New Year to you all, and I hope 2012 will be a brilliant year for all of us. Alright guys, we're going to do a little bit of discussing the Euro today. Hi, how are you? And one of the things that, again, I want you to keep an eye on is, especially now with what's happening in the Euro. We're getting reports every day. We're getting news coming out of Germany, coming out of Italy, and we see the Spanish funding. All these news are coming out, and what I see, and this is something I really want to impress upon you, is whenever you see those news coming out about maybe a positive news in Italy, or maybe that Spain is getting a less interest rate, paying a less interest rate, all of these news that are coming out are simply, let's call them daily news. It will take a great deal of time to change the underlying. I'm just going to want the chart is not. Okay. There are two cameras, or is there two cameras? What two cameras? There's only one camera. There are two charts. It's just one. The data is a little bit slow. I don't know why. But anyway, what you have two hot guns. Okay, that's another story. That's that. Yeah. So, what I would like to discuss with you today, for example, having the news. I mean, you should be happy today of whatever positive news is coming out of the Euro. Okay, these positive news that is coming out of the Euro are merely, you should consider those for yourselves as a selling opportunity. When you're looking at your daily charts, and I'm sure all of you, if you remember, we were taking short the Euro from 138.36. That was our selling point on the Euro. And this is one of the, right there, that's, as you see when I put this and you saw the line come up, the 138.36, that is our structural point. And this is where we started shorting the Euro, and that's our open position now. And I will explain that. I have to go to explain. And once the prices here broke the 138.36 right there, because this is a structural point. This is a structural point over here, and now we are below the 138 structural point. Once you're below the 138 structural point, then you are in a bear market. Being in a bear market, do you want to buy or do you want to sell? I'm asking. Do you want to buy or do you want to sell? I am in a bear market. The trend is down. Do I need to be a buyer or a seller? Exactly. I want to be a seller, and that is so. Now, if I want to be a seller in a bear market, what is the characteristics, the price behavior characteristics of a bear market? What are the characteristics of a bear market? What is the characteristics of a bear market? Absolutely charged. We're getting to get lower lows, right? We're going to get momentum to the downside. Good. And what is the third thing I'm going to get? I'm going to get pushes to the downside. I'm going to get what we call lower lows, like this, guys. This is what I'm going to get. This is a low. This is a lower low. And then, of course, I'm going to get the final lower low. And that is the definition of a trend. If I have, exactly, I'm going to get very sharp momentum to the downside. But all what you have said, guys, is correct. But there is one more thing that you need to know. One more characteristics of bear market. They are oh yeah, Maharaj. Okay, you guys know exactly what I'm talking to you. Okay, lovely. But in addition to that, they are violent reaction. You're going to get violent reaction. If I'm going to get momentum to the downside, I'm going to get a violent reaction to the upside. Look at this. This here, that's the beginning of a bear market right there. That's the beginning of the bear market. Once it crashed over here, that's the beginning of a bear market. What do you mean you don't have the... This is the Euro-US. I mean, this is a data feed where it says Euro at PFG. This means the Euro-USD. Okay? So, once it broke here, there, that means that is your beginning of a bear market. And if that's the state of mind that I have, or the state of the market that I have, that I'm in a bear market, and now I have a downward trend, then I have a specific expectations to what I am going to see, and I have an expectations of what the chart should look like, and I have an expectation. I'm going to do that exactly. That's what I'm trying to tell you now, Keith. I have an expectation of what I am going to trade. So, to answer Keith's question, how do we ride a bear market? Well, if I am in a bear market, this means I have a downward trend. I have a downward trend, then I'm going to see a violent move to the downside. Look at this, from 146 to 135. That's 1,000 move, 1,000 pip move through a structure point. Then from here, I should get a continuation to the downside of another 1,000 points at least. If that's the case, if I'm going to get, and of course when you see something like from here 145 and it goes all the way down, let's say we're here, that distance between 145 and 133, this is what? This is 1,200 pips. That is 1,200 pips. And these are one of the tools that I'm sharing with you, one of the tools to discuss, to identify a bear market. That distance over here between this line and this line is 1,200 pips. You see that? Now, let's count the days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. In 30 days, let's say 30 days, 20 trading days. The euro was trading at 145. It is now trading at 133. Can we say that this is about ballpark? I mean, I don't want a mathematician out there to say I'm wrong. Can we say that this is about 10%? That the euro has lost 10% of its value in 30 days? Absolutely. From 145 to 133, this means it has lost about 10%. That means that everyone, think about, again, this is the key that you have to, this means that everyone in Europe, everyone that deals in the euro. Every single human being in Europe, every single person that has euro denominated assets, okay, has lost, even if he's trading or not trading, even if he's just having a job, goes to his job in the morning and he's putting his money into the bank to save it. Okay? These guys have lost 10% of their net worth. They lost 10%. Everybody. If I had €1 million if I had €1 million right there, exactly, Luca, in 1 month, if I had $1 million, if I had €1 million, on, let's say, September, let's say right there, I had €1 million on the 26th of August. Right there, I had €1 million. I kid you not, this is the truth, and this is, we all have to, that's why we need to be into the market to protect ourselves. If I had €1 million here, on this day, within 30 days, and let's say I have the money in the bank, I have €1 million here in the bank, I didn't touch it. Today we get 0 interest rates, we're not getting interest on the bank, on the money. In 1 month, and I didn't spend it, I didn't write a check, do I still have €1 million? Think about it, guys. On August the 26th, I had €1 million. It came down to here in 30. Do I still have €1 million right there? Come on, guys, all of you. You might have 1 million pieces of paper that says €1 million, but your buying power has lost 10%. Like what? Exactly. So in reality, it's the versus the dollar. This means that if I lost 10% of my buying power, then right here you only have 900,000. That is the reality. So whether you're involved in the market, not involved in the market, trading, not trading, doing anything, if you do nothing, you're losing 10%. So I have explained this to you. You've seen that here we all, and I'm in Europe as you are, we got shrunk 10% in a month. That is your first sign. No, you don't. Forgive me, I don't mean to be... God helps those who help themselves. If the first sign of a bear market is when a market loses 10% of its value in 30 days. That's the first sign of a bear market. So if that's the first sign here of a bear market, what's next? What is a bear market? Bear market, what are the characteristics? I'm going to get momentum lows. I'm going to get lower lows. Okay? I'm going to get lower lows. I'm going to get violent moves to the downside. And I'm going to get violent reaction. But this thing is going to go lower. This means that this thing is going to go lower. Because now that's a bear market. So I am going to look for moves like this. Big moves to the downside, which is going to create my momentum low. And I am going to look for violent reactions like this to the upside, Okay? So, if I'm in a bear market and I'm looking for this and I'm looking for a violent reaction, so what should we do as traders right there? What should we do right there? The market is going up and it's going up pretty perpendicular. If you know it is a downward trend, if you know that the trend is made of lower lows and lower highs, if you know that you're going to get violent moves to the downside, exactly, then that's what you have to do. And now I have to take a, we have to sell the pullback, and I'm looking for pushes to the downside. So when I see this violent move to the upside, what I need to be doing is looking for an area over here to sell it. So let's do that. Let's see the chart. And this is how the beauty of price behavior, and by analyzing the chart and knowing what to look for. So I told you this here is my what is this point? That is my structural point. So this is my structural point. Actually, momentum low. A momentum low is a version of a structural point. Of course, forget about the green days. If it walks like a duck and it quacks like a duck, it's a duck. You have a bear market, makes momentum low, going down, it's a duck. You have to trade it this way. You don't see a duck and you say what this is. It walks like a duck and it quacks like a duck, it's a duck. This thing is coming down. That is a downward move. Let me move this line for a second. Okay? Now, I want you to see this. Look at this. From 131, it's beginning to get to the upside. It went above the structure point. I'm above a structure point. See how violent this? From 130, it went up like 7%, 8% in 1, 2, 3, 4, 5, 6, 7, 8 days. In 8 days, it came up 8%. Is this a violent reaction? Absolutely. That is a violent reaction, and people that don't know what they're doing would say, okay, I will buy it. But if you know how the behavior in the market, you know how the chart is structured, you know how people vote their money into the market and how they behave, because the price is nothing more than the result of people's behavior. If you are happy and wanting to buy, you're going to come to the market and buy, and therefore you're bringing demand to the market, and therefore the prices are going to go up. If you're negative to the market, then you're dumping everything else. You're bringing more supply in. And the chart therefore becomes an open book. And that's what's it's price behavior gives you two things. Price behavior gives you two things. It gives you sense and simplicity. That's what price behavior does. It makes the chart speak out to you and it makes sense to you. You don't no longer have the enigma and the whatever of the market, and it is simple. It is something that you can understand. It is something that you can identify, and it is something that you can repeat. It is something that you can repeat, and therefore, if it is something that you can repeat, Charles, if it is something that makes sense to you, if it is simple and you can repeat it, then that will make you be consistent. And if you are consistent, following a simple set of rules that does make sense, then you will be able at the end of the day to make money and have profit. So right there, now we agreed when you do your chart analysis and you use the, you know you're in a bear market. So this now is your expectation. And now look at this, it's going up. Look at this. I want you to, we are going to trade together, guys. We're going to trade together. It came back above the structure point over here, and it went up all the way up to 142. Look at this, from 138, 400 points in one day. Boom. Are we still in a bear market or a bull market? Absolutely, we're still in a bear market, and we're still looking for a decline. No, not yet, sir. No. You don't have a structural failure to the upside. You must have a structural failure to the upside before you say the trend has changed. Exactly. So right now, let's plan a trade. Let's all of us here in the room plan a trade. Yes. Now, here, should we be looking to be buyers or should we be looking to be sellers? Should we be looking to buy or should we be looking to sell? Okay. Where will we buy? Where will we sell? This is what you see. This is what you have right now. Where can we sell? I'm showing you how simple. You haven't even had step one in price behavior. I'm showing you how simple it is. Okay, Charles says, Lucas says sell below 138. Charles says, well, okay, well, now we're already below 145, guys. Exactly. I have now a structural point here, which we have identified is 138, and I have seen, look at this, when the prices broke below 138, exactly, Keith, below this, it gave us 1,000 points. Now in this case here, Mahdi, it is always, this here, 145 is a lower high. Right there, it is a lower high. So right there, if worst case scenario, we are going to sell it below 138 right there, and let's say all of us, we are going to be conservative, and we are only going to sell it below 138.36. All right. Who wants to sell below 138.36? 1, 2, 3, quick. So who wants to sell? Okay. Okay. Just two? Good. Two of you guys? Come on. That's it? All right. So, okay. The guys that follow price behavior are going to sell below 138. There you go. And you're still with it. And now, my friends, it is trading at 127, and you can press for more. I mean, there is rules again to how to press for more, but right now you have made, just by one decision, to all of you together, you have seen this, you have made up today a 1,000 pips. That is a $10,000 move. And now you're still looking, this is your momentum low, and this is a selling opportunity, 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 and you're going to press it on the way down. This is what? Now, does this work across the board? Do you think what I have shown you now in the euro, will it work everything else? Will it work with the pound? Will it work with the Japanese yen? Will it work with the dollar? Absolutely. Because guys, when you are trading based upon, yes, a chart is a chart is a chart, by why is it a chart is a chart is a chart? A chart is made of what? A chart is made of what? No, don't worry. I mean, fractal, this is too scientific for me, Charles. This is made of what? It is made of, exactly, I would say, price. People buying and selling. And people buying and selling, it represents everybody's point of view, and his feeling, his emotions is right there represented in every single chart. And therefore it is pure price. So when you are trading a chart based upon price behavior, you're not trading the name. You're not trading the euro, you're not trading the pound, you're not trading gold, you're not trading crude oil. But what you're trading the people of that trade, that instrument. You're looking at the other trader on the other side of your trade, and you're not looking at the euro, but you're looking at his behavior, you're looking at his action, you're looking if he's scared, then he's going to be dumping his position. If he's optimistic, then he's holding to his position. If he's panicking, he's going to throw the baby. Exactly. These human emotions represent themselves in the price action. In a way, but the difference between this and poker is that we're not gambling. And therefore, some people say that poker is gambling. But poker, particularly professional pokers, are not gamblers. Because he's not trading his cards, he's trading the people that is sitting across of him. He can see their body language, he can see their tells if they're scared, and that's it. The symbol is not important, the name is not important. You are addressing, you are trading the trader that trades this. And if you can understand that, then every single chart, every single decision that you'll be making, you're following a specific set of rules that makes sense to you and has the simplicity that you can apply these rules in order to find the profitability at the end of. So let's see if this works again in a different instrument. Why don't you pick one for me? Let's do this and apply it on one. Choose one. Choose any currency, anything that you like. Okay, the pound yen, the pound dollar, the dollar, gold. Okay. I can do, I'll be happy to do that. Let me show you now. I'll do the pound and then I'm going to do the Aussie. I'll do both of you. Now, okay, hold on a sec. Now, for the pound, and this is, again, the simplicity of using price behavior. And let me explain what I'm talking about. Right here, we identified the structure point as 138.36. So we know the value that this structure point is 138.36. And therefore, when it comes below 138.36, we're selling it. Therefore, if I'm looking at the pound and we identify the structure in the pound, I'll give and the Aussie. So the pound is 157.82. That's my structure point in the pound. In the Aussie, I think it is 103.82, something like that. That's the numbers. And we identify these numbers every single week. Every Sunday, we have the trade planning session, and we look at the charts every Sunday at 6 o'clock GMT time. We look at the charts, all the currencies. We identify the structure points, the buying points, the long points, and the short points, and we record the session, so it's uploaded on the website that you can go and you monitor your trades, and you can use those as a buying and selling point. Therefore, you can find out values like this, and I tell you today, if the price of the pound comes below 157.82, then you're going to go short, etc., etc. So let's put the, we have something that we have done special for all of you for, and it's, we're not doing it actually, we're not selling it, it's actually not worth it for us. I mean, I didn't mean it this way. We are giving it for all the FX Street students and the people that attend FX Street, because we appreciate what FX Street is doing. We are giving you the 3 sessions for like £5 a session. You're getting it like less than a cup of tea. And the reason we're doing that is just to cover the cost of the conference room, the webinar, and the hotcom and all that stuff. We're doing that because we want you to learn how to become successful in the market. You don't need to be bogged down. You don't need to be confused by somebody says, oh, this is the moving average, this is whatever it is. That stuff is over and done. So for a cup of coffee every week, you can come in and sit with, or a cup of tea. I like coffee, but anyway, cup of tea. You can have your 20 trades or 10 trades for the whole following week, and you can be on the right side of the market. Go to wherever it's on FX Street and go there. It's a cup of tea. And December session we have this anyway. Well, the December session is now we've changed. So anyway, let's go now to the pound, and I'm going to change here. And remember what I said, 157.82. So if I'm going to change the symbol now to the pound, so it's the pound dollar. And look at this here. I'm going to put this, the 157. And I see as soon as I put it, you will find that that is your structural point. Well, just go, it's on FX Street, on FX Street. I'll have somebody put the link for you. So, as soon as I put the 157, you see that. So, right there, below the 157.80, there is your selling point, your short. There is another structure point, which is the 155, and therefore you're going to stay. The moment you have a structure point, the moment they have a trend change, and the prices come below your structure point, therefore you are continuously going to stay on the short. So right here, let's look at this chart. Where is our next structure point? What is the market condition now? I'm in a bull market or a bear market? What am I in? Absolutely. Where is my structure point? If I look at this here, you can see that if I put a line, absolutely. If I put a line right there, that is my little spike over here. This is 152.72. So you put the 152.72. And we'll make this, and we'll give it a yellow color. Right there, that is, I'm going to explain that, exactly 152.70. And you see what? That was yesterday's low. And that is your confirmation of a structure point. It came down yesterday to it, it tested, it bounces back up. So right now, once it comes back, if it gets below, so right there, exactly like what we're talking about in the euro, that is the first structure. It comes down. This now becomes my second structure, and I'm in a bear market, so I'm looking for a big move. And when it can take the second structure, I'm looking for a bigger move, another 1,000 points. And therefore, right below this one here, that is going to be, we're not looking to buy the pound. Nobody tells me that this is support. If somebody says here we buy support and we sell resistance, he doesn't know what he's talking. You have to be suicidal, literally suicidal, to buy support and sell resistance in a market that's trending. We do this on a weekly basis, on the site every site, and then we have it recorded and it's on our website. You can see it all week for this, and you get all the numbers. And I'm doing this. I don't want any of you to think that we're doing this because of any monetary gain. I mean, this is done, as I said, for a cup of coffee for you. It only covers and we want this because we want to promote this price behavior. We want you to understand what it is and how beneficial. Thank you, Mark. And again, if I can get people that follow this and they become successful, again, it is for everybody's benefit. It is we are happy with what we're doing, and we want you to be successful. And this is what we do. We create our radar screen, and we identify. I mean, this is a new computer, so I haven't set it up. But you see here, long point. You see the prices. We put it here. So, for example, the euro. I'll show you how it would look if I put the euro dollar. So for example, my short point, my structural short point is 138.36, and my stop is going to be 138.36. So you would see that on your radar screen. You will see that these price points like this will appear on your chart, and you can, as soon as it gets above it, you're going to buy it, or below it, you're going to sell it. And now it pops up on your screen, it populates all of this, and you're making your decision, your buy and sell decision. Okay? So, yes, we're putting up the link for you now. And we'll get it for you in a sec. So, he's putting the link up for you now, right now, guys. And one of the things that we do, I want to explain to you the idea behind the weekly trade planning session. A lot of people come to me and they say, "Oh, trading, I buy this and I'm not making money, and I'm not making so much money, and I'm doing this." And I find it very disheartening if somebody comes into the market putting his hard-earned money into the market, trying to take a trade without doing or giving the market the proper planning, or analyzing the chart, or knowing where to buy or where to sell. This is, if you come into the market Monday morning and you don't know, if I tell you the pound is below 157.20, and if your answer is not, "I am short," because it is a structural point, and you can recite this chart from your head, you will never, ever become a successful trader. And I'm sorry to say that. I might be disappointing people, but that's it. Trading, getting involved into the market requires work, requires passion about what you do, requires that you need to know what this market is doing. And if you do, you're going to be rewarded tremendously. You're going to have the job of a lifetime. But if you think you can come cavalier into the market and, okay, I'm going to do this, or because the moving average has changed, now it's turning, or at the MACD, or whatever, that is not going to work. Putting the time, putting the planning, knowing what you're doing and the reason behind what you're doing before you pull the trigger on every chart, that is the key to your success as traders. So doing that, you have to make it part of your work ethic. Trading is simple, makes sense, but it's not easy. You have to put the effort, you have to put the time to identify where you're buying and where you're selling. And if you're able to do that, then your decision-making process is going to be much easier, and you'll be able to identify what you need to. And if you are going to have 1 or 2 or 3 or even 6, whatever the number of losing trades that can happen because things spikes, people reactions come into the market, If you have done your planning, you will be able to make the decision when the market goes against you. You can always come back and take the other trade, because the second trade is what's going to make you a winner. If you don't do your homework, and I say this, and even I say this to the turtles here, and I'm trying to find a way, the most important thing that you have to do if you want to become a successful trader is the trade plan. Every Sunday for the last 35 years I do my trade planning session, and I'm doing this because it's a work ethic. It is the work ethic. That's part. You don't plan yourself. You don't know what you're coming Monday morning to do. There's no way you're going to. Maybe next year, John. So I'm doing this again. We're doing no. It says no. We changed it to Sunday. Changed it from Saturday to Sunday. We changed it to Sunday. We're doing it at 6 o'clock GMT time. But still, get on the link and we'll send you the. Exactly. You only succeed by doing. You don't succeed by theory. You don't succeed by reading books. You need to have a methodology, a way of doing things. Step number 1, step number 2, step number 3. That's what I'm doing. They have to make sense to you. They have to be simple, and you expect a certain outcome. 6 o'clock London time. I want you to sit here and keep my phone. Okay, yeah. We're doing it Sunday at 6 p.m. GMT, 6 p.m. 1800 GMT. Okay. So somebody was asking me a question. He's going to put the link. So he's going to put the link for you again, and you go on FX Street. And somebody was asking about earlier. I was asking if you place your structural points on a daily, weekly, or a chart period. This is a nice question. And who's asking it? Coco. I think I told you this before, Coco. I think you asked this. But anyway, if I tell you, look at this. If I tell you that my structured point, if I tell you, Coco, that my structured point is 157.82, right? Which is this. This is a daily chart. It will be the same. If I put the chart to be a weekly chart, it will still be that structure point. And if I put it in a monthly chart, it will remain the same. The price point, you are dealing with a price point, with a fixed point, 157.80. And if it stands out on the daily chart, it will stand out on your weekly chart, it will stand out on your monthly chart. You are trading the 157.80 even if you put it on 1 hourly chart. It absolutely does not matter. You're trading a price point. You're trading a decision-making point. You're trading a point where the market has made a decision. And that decision-making point is a price point. People change their mind based upon a price. They don't change their mind based upon a... And I thank you, Coco, but I'm explaining this to the rest of everybody else so that they understand. They make their trading decision based upon the price, not based upon news. They don't make their... If they feel that this thing is getting bearish or they're losing too much, then they will turn it on. That's good. So that is, so we are now at 2 o'clock. We have another 20 minutes to go. So yes. Now it is going, if it breaks below the 152.72, which is this structure point, then you're looking for another leg down, and this leg down should be somewhere probably to there. That would be the first step, and this one will be the one. and this would be probably the next step towards the. So you're looking at any break above below the 152.72. You're looking for a further decline. The 153. 153 here. Not particularly, Charles. Just going through it, and you want to going through it, and it stays below it. Let's wait for it. It stays below it, like the problem. It stays below it. The problem is you're trading below. Thank you. Hope so. Thank you so much. Pleasure be mine, sir. It's not already below. It's 153.12 now. So I have two times. I mean, this is, you have to have a standard view of your charts. You must have also. Oh yeah, absolutely. Now, yeah. I mean, the 153 is what we call a significant point. Okay, there's a difference between significant point and structural points. There's significant points, structural points, flipping points, reversal points. There are different kinds of points that you can see on the chart, and you have to identify. But the 53.44 is a decent point. We can call it a significant point for the time being. So you want it to break. You want to provoke me? I'm happy that you provoke me. I'm always listen, guys. I enjoy coming to FX Street. I think FX Street is, if not the best website out there. They do a great deal of effort trying to bring information to you guys, and I enjoy doing it. And I really want you guys to become successful. And one of the reasons that we did the turtle is that we're trying to show you and show the world that yes, you can do it. Yes, it is something that you can understand. It requires some practice, and if you know what you do, and you will be successful. And doing the turtle is one of the reasons is to make the point to you guys and to the world that if you want to do it the right way, there is a way to do it. It might not be the holy grail, but it's a good way. It does pay, makes people understand, and if you follow it, it gives you enough simplicity and knowledge so that you can take successful trades and become successful. Okay, can I explain the difference between a long point, a structure point, and so right? Okay. Okay, let's see the cat, and I'm gonna come and right here. I mean, this is a buy right there. I mean, that is right here. This is a buy. I mean, we're buying it, and your stop is below the market side or on the other side of the range, and that is. It will have a little bit of resistance over here, but if it goes above the one, you have to be long above these things. Okay. I'm sorry, what Maharati is saying. You're from Singapore, yeah. I don't know what the first half of your question is. Well, I mean, no disrespect, Luca, but a structure point is a structure point. It doesn't have to be for you. If it's a structure point, it's a structure point. Okay? And it has to be for everybody. The structure point is, like I say, 157.82 on the pound. This means it's 157.82 around for everybody. If you're trading a 5 minute, if you're trading a week, that is a structure point. Has to be for everybody. Luca, don't. It might be otherwise. Well. These horizontal lines, this is an intraday chart, And these horizontal lines, these are this is part of our system methodology and part of the software that we use. The rules, this is the only rule-based software that I know of in the world. And when I say rule-based, it means that we have specific points where we're going to buy, specific points where we're going to sell. And these rules were clear to the point that that these points are so clear that we were able to give it to a computer programmer to program it, and with clarity, with that precise. And we teach you and we train you on these specific rules. So there is no ambiguity. So right here you know exactly what you're going to do, and you're going to be a buyer, you're going to be a seller, you know exactly what you're going to do. And it will also can give you automatic entry. It will, if I turn the strategy on, it will give you a buy signal, it will get you into the trade. It can actually do an automatic execution for you, it can get you into the trade, and it can get you out of the trade. And it does also what you can see here. This is what we call the radar screen. This is part of the software, and basically it follows, it's as if behind every single one of them there is a chart, and it's scanning the market. And then as soon as you have a buy signal or a sell signal, it will pop up here and tell you buy or sell. Now, take a look here what we're talking about. Every one that you have a signal, you see that you're making money on the trade. This has no signal, so it's a waste of time. You don't need to bother. You have a buy here, you're up 16 pips. You're short the Euro Aussie, you're up 23 pips. You are short the Euro, you're up 46 pips. And every signal corresponds with a winning trade. That radar screen is a measure of how successful this thing is. Every single one of them that's giving you a signal, that is your profit on every trade. That's 37, that's 22, that's 34. If you took every single one of those signals, you'll be up 20 on this, 25, 22. This one you didn't take it because there is nothing. All of these, this is the difference between your profit from the moment the rules have given a signal. Okay? I'm happy to hear that. I'm happy to hear that. That's very good. I'm happy to hear that. Do I look at patterns, wedges, and triangles and stuff and that? Absolutely. When you're looking at the chart, Len, okay, I'll answer Luca's question, then I'll come back and answer Len's, because Luca's question continues with the point. Yes, it is not just much better to be capable to know what these structures are done. It is imperative, Luca. It's a must. Therefore, because have you seen how many robots, Forex robots, and how many systems are being traded out there in the market, are being sold? And they come and tell you, this is making 80% profit, this is making 90% profit, and then the people go and buy it. 100% of 100%. I don't know of one single person that bought a robot, FX robot, and is making money. I do not know of one single one. Yet there are people out there selling this stuff right and left. Why do those people lose money? They lose money because they don't know the rules behind why the robot is buying and why the robot is selling. And if the robot is making profits, let's say 90% of the time, and if he takes 100 trades, this means that he's going to have 10 losing trades. So if the robot comes and takes 1, 2, or 3 losing trades in a row, the guy that bought the robot is not going to take the next trade, and therefore he's going to stay with his losing trade. You cannot afford to stay in with a losing trade. You need to take the winning trade and take the losing trades, add them up together. Let's say you take 10 trades, 6 winners, 4 losers, and then at the end of the day, you're making money. But you must take the 10 trades. And if you know what's happening in the market and you know the rules of the software that you're using, then you're able to take the next trade. If you don't know the rules, you will immediately become gun shy and you will be scared to take the next trade. And that is the key to where people lose money, because they don't know what they're doing. They're getting into something based upon somebody's analysis or whatever, and he's hiding. He said, this is proprietary. This is proprietary. I'm hiding it. This is my secret. Well, if it is your secret, why do you want my money? I'm giving you my money. You have to give me the secret. I'm paying for it. Right? I'm paying for the money. Give me the secret. Why should I pay you money and don't give me the secret? Tell me, okay, I give you the privilege of losing it. No. And that's why I say, we have anybody that comes here into and takes the training, he knows exactly. He can put his finger and say where this thing is buying and where this thing is selling. I'll show you. Let's take a look here. Let's take something different. Let's choose. Let's take the Euro CAD. Okay. And I'm going to show you again one of the rules about how to do price behavior. Take a look at this chart, guys. Can you see this chart? Okay. I'm going to move the cursor, and I want you to tell me where would you like to have shorted it. If we are human beings, we see this chart and we see the behavior, where would be the last trade that you would like to take? Tell me where to stop. You want to go short from here, from here, from here, from here. 135, okay, what else? Anybody likes to sell it from somewhere else? Choose the best trade. Choose the best trade you would love to short it somewhere. 140, okay. 137, right? Okay. So basically this is where, let's say the 140 right there. This is where you want to sell it. Brilliant. Let me turn on the strategy. And again, what we're doing is I'm going to insert a study. It's not even there. And it's our... This is the power of price behavior. I'm going to put the long-term strategy. See that? Click OK. Now, every green line like this is a winning trade. But let me show you the last trade. Right there. This is the last trade that we shorted it. Short at 138.30. 138.30. So this means that you are up on that position right now over 1,100 points. You see the chart, you see the price behavior, you see where people are going to selling, and what the software is going to tell you, okay guys, right there, that is your short, now you have to be short and you stay with it. And it's not just this trying traders. Choose something else. Choose anything. Name it. I'm going to put it on it, and you will see which one is winning and which one is losing. And the only thing that you do is follow the rules. You want to do gold or something? Okay, I'll do gold for you. I'll put the dollar yen for you also. We just covered the short on the gold. Right there. We went short over here. We closed it right there. That's a winning trade. That's another winning trade. Look at how many winning trades. Winning trade. Winning trade. Winning trade. Small losing trade. Look at this. Okay, let's put the dollar yen. And all what I'm changing is the symbol, guys. I'm not changing anything other than the symbol. I'm not formatting. I'm using price behavior, no formatting, no optimization. Somebody says, I have a system that works for the dollar yen. A guy came to my office, I think, before the Christmas, and he says, I bought a system that works perfectly for the pound yen, but it doesn't work for the euro yen. But I was sitting there, and he said, I paid £2,000 for it, and it works perfectly for the pound yen, but it doesn't work for the euro yen. What can I say? I tried to keep my mouth shut, but what do you want to do with the euro yen and the pound yen? If it works on the euro yen, it has to work on the pound yen, it has to work. That equation doesn't know what it is calculating, what's the open close of what. It's taking the opening, the close of it doesn't know the euro from the yen from the pound. If you have rules that work, they have to work across the board. If you have something that specializes in something, then it's ridiculous. Anyway, that's it. We're getting a little bit of noise here. Everybody's scared from the intervention from the DOJ. So this area of the intervention, the intervention came in, so it's a little bit wobbly. But you need to be looking at taking, but technically we're short. We started shorting. Remember, guys, when I think I was in the ITC last year, we were talking about shorting I think the recording is on FX Suite on our website. We were shorting from right here from the 110, and we took it all the way because it was a position trade. We had a weekly chart, and he stayed with it. That was like a several year kind of trade. Look at this. You can trade anything you want. Look at this. You're short from here. You're short the dollar yen from 115. You're short the dollar yen from 115. Where is the 115.77? You covered your short 80. You made 3,500 points. Well, if I get invited, I haven't been invited yet, but I'd be honest if they invite me. So, anyway, the CAD. I don't know what you're trying to say, guys, but training trader, whatever that is, trying trader, I don't know what you're trying to say. You can clarify, I'll be happy to answer. Okay, so, well, to draw the structure point, it is part of, you have to understand the chart structure, all of it. Look, and this, it does take a little bit more time. It's not something that I can do in the 1 hour here. It takes several days to explain it. But for the time being, the easy part is when you come into the planning session on Sunday, at least you will get the numbers, and maybe by you putting them together with your chart, then you'll be able to identify and see how they work. And let's see that this is the CAD. Somebody was talking about the dollar CAD this morning. Look, this is what I was telling you. Right here, this is what I told you. This is you have to buy. I didn't even think. It didn't take a second with buying. These are the 2 daily highs. It took it, came back. It sat at the 2 days. Boom. There is your trade. You're up this morning from 101.90. Like the guy that said 102, that the dollar CAD is 102. You're up now 40 points. That's $400. That's what you need to be doing every single day. If you make 300 pounds a day, 100 pounds a day, at the end of the year you'll be up like 50, 60,000 pounds. What about triangles and wedges and flags and all that is part of the chart structure. Now, you have to know what you look for so that you can decide if the wedge or the flag or whatever it is, you have to look at it. You have to, let me ask you a question, somebody. What is this? What's this? This move. I'll put the cat for you. Here? Okay. Okay, you can call it a flag. Yes, you can call it a flag. I can see within this flag, I can see maybe a small, I mean, again, that's what I'm trying to show you. You can see like a small triangle here if you wanted. I mean, if you squint, you can see anything you want. If you squint on the chart, you can call it a gift. Yes, absolutely. So if you can call it a channel up, all that kind of stuff. But what you do is, if you know that this now, the trend is down, so this could be a gift, this could be a bear flag, this could be a triangle, and that's anyway. The point is, if you squint like what you're looking, Luke, I think you were saying, or somebody was saying that this is a structure point for you, and if it's a structure point for you only, this means that you're squinting. And if you squint on the chart, you can see anything you want. All right? So yes, there may be a triangle over here happening at the end, but that baby is going up. The dollar is going up. Now the trend has changed and the dollar is going to go up, and that's what you need to be doing, is taking the trade and looking for an opportunity to buy. Yeah, he's going. Exactly. All right, that's fine. Okay. So we have another about 10 minutes to go. So if anybody has any other question, because I don't think we don't have enough time to start a new topic. So if anybody has any questions, feel free to ask it. Put the session again up for them so that they can come in. Now, I am telling you again, you want to become a successful trader, you need to do your homework. And you must plan your trades, you must do your homework, you must know, if I tell you the euro is trading at this price, you must know where you're going to sell it and where you're going to buy. The trend change is, first of all, you have to accept the fact that it does take a great deal of time for you to have a trend change. For us, let's take the, where can you get e-signal? What e-signal? Are you in the England, Kumar? E-signal, they charge about 79 or 80 bucks in Canada. Oh. You can get e-signal from anywhere. And there are several, I mean, there's a lot of different data vendors. If you're interested, I mean, let me know or send an email to the, put the email. Send an email and we can send you a list of the data vendors, or what kind of software you need, or technically anything you need as a data feed, send it to us. Yes, there are free data feeds. Again, when I say free data feeds, you want something that works with our platform so that it can give you the signal, because the key is this. Let's pick something, let's pick a currency. Let's do the pound Aussie. To put the pound Aussie, if you put the pound Aussie like this, for some reason I'm not getting the whole data for the pound Aussie. That's weird. But if you look at something like the pound Aussie, I'm trying to get you something with a trend. What else? Let's take the dollar index. I'll show you the dollar index. If you look at, too late to put it now, but the euro pound, okay, let me put the euro pound. Okay, if you look at the euro pound, are we in an uptrend or are we in a downtrend? Let's do this. That's again, you have to, right now, are we in an uptrend or a downtrend? Okay, I'll put the link again for the Sunday session. If I add more data to the chart, to the screen, are we still in a more bearish or more bullish? We become a little bit more bearish. If I add more chart, more data, oops, suddenly, yeah, but that's why I'm doing that. I'm doing the trend change for you now, Coco. That's what I'm doing for you. So right now, if now it becomes sideways, now it becomes bullish. So sideways to bullish, we have not yet broken to the downside. Now the thing has changed. It is not actually that negative. Exactly. So now, where would you say, and the part of being a trend change, Luca, Coco, is this, that you need a span of time like this. You need this kind of time from 2009, all that stuff to move sideways, to be neutral. That neutral that comes after a bull market, is where people begin to change their mind, begin to change their bias. They become more negative. They become more, it's not a range. They become more negative. And therefore, in that, you begin to make a lower high and a structure failure, lower high and a structure failure, lower high and a structure failure, and so on. These are people changing their mind. More people change their mind. More people change their mind. And then, finally, you would say, okay, where would all these guys that were bullish will turn negative? And it's right there. The number is, one of the numbers we have is the 82.85. I'm going to put it for you. This is where we started shorting the pound. Everything we trade, we have a number for. Right there, as soon as it broke this one, this is now, right now, we're basically, this is where we're going to take it short, and then we're going to stay with it, and this here becomes your structure. Once it breaks now below this, below the 80 somewhere like that, then you have now a trend. So far, right now, the trend is still up in the euro pound. If it breaks below the 80 level, then you have a trend change, and that will be now, you have a bear market to the downside in the euro pound. The reason this is happening is that both the euro and the pound, both of them are weak. So you're trading weak thing with another weak thing, and therefore you get all this kind of noise. But eventually it looks like the euro is, of course, weaker than the pound. Well, the way we decide on the stops, I mean, we have a reason to get into the trade. We never trade because we have a feeling. We always have to have a reason where we're going to buy and a reason where we're going to sell. Why we do the trade, we must have a reason. Okay? Therefore, no, I didn't get it yet. Maybe it's because I'm doing the room, so she'll after the webinar, probably she's going to give it to me. Therefore, if my reason still stays. Let's say here, for example, I'm going to go short below 82.85. So let's say it gets below 82.85. The reason I went short is because it trades below 82.85. Then my stop is going to be a little bit above the 82.85. I have a reason to get in, and I have a reason to get out. What gets me in the trade keeps me in the trade. If my reason does not change, then I'm staying with the trade. In a way, yes, Coco, in a way. What part of the what do you think about oil? Basically it has been, again, it has failed here. I mean, the top point here is 103.28. That's the number, the 103.28. And once it tried to trade above the 103.28, and right there it failed. And then we had now the crash to the downside. It's hard right now because everybody's scared of what Iran is saying or doing in the with regards to the Gulf of Hormuz. And again, so people are scared, and you're looking now at who doesn't, and you're looking at the we have a long weekend. Monday is a holiday in the States, so we might get a little bit of, short covering or something. To people don't want to get into the week with a short position, so we'll see. But in essence, it's on the way down so far. All right. So with that, guys, we're at the top of the hour. So I want to thank you all very much. Put our email. And if you need anything, now we have a chat room. This is what we every day of the week we do our planning session on. God bless you. We do our planning session on Sunday. We take the trades that we planned on Sunday, we take them in the following week, and then we assess ourselves the following week, and so on and so forth, and then we find what we did right. And so if you have any questions, the email, you can send me an email at info@trainingtraders. I'll be happy to answer it. And again, I encourage you all to come into the trade planning session. If you're not willing to invest in yourself £5, a cup of tea, well, I don't know what to tell you, but you need to get in, you need to know what you're doing, and if you get one positive reaction and make money, and then the next week you make better money, the next week you get a better understanding, then you're on your path to success. With that, I want to thank you all for attending. I want to thank FX Trade, and God bless you all, and a Happy New Year. Bye-bye.